All right, greetings everyone, and welcome to our short video on how to use Jamin Heller's trade analysis and risk management calculator. Quite a few new features added into the spreadsheet calculator, and I wanted to review those with you and again give you the background to why it's important to plan your trade using a tool like the trade analysis spreadsheet. So the spreadsheet really started from a special presentation by Brian D'Amico, our manager of educational resources at VectorVest, and that date was September 18th, 2015. He recorded a video titled How to Set the Right Entries and Exits, and I really strongly recommend you go back and listen to that to understand the rationale for planning your trade and some ways that you can do that. What you get when you plan your trades: you take control of your emotions and your trades. You minimize your losses and cash in on your winners. In other words, you know exactly when you're going to get out of the trade. You don't let those trades get away from you to turn a small loss into a large loss. And more importantly, or just as important at least, is you know when you're going to get out of the trade with a nice profit. You set that profit target in advance. You can always raise the target later with a tighter stop loss, but at least you know when you're going to get out with some profit and have some basis for that decision. And overall, what this process gives you is peace of mind. You know exactly when to exit the trade, either with a nice profit or a small loss. The only three things you need to consider before you press the Buy Now button is, number one, what should my entry price be? We want you to consider using a limit order. A buy on stop limit order is what most brokers call it, and usually that will be a few cents above the last close or a few cents above a recent candle high, so that the price is rising at the time that you make your purchase. And number two, where should I set my stop to get out in case the trade goes against me? And we'll show you on a graph how you can use the VectorVest stop price. You can use a moving average. You can use a percent gain or loss that's comfortable for you. You can use support and resistance, putting your stop price just below a recent level of support is a very good approach. So there's different ways to do it. We'll show you a few of those in an example here, but again, you need to know where to set your stop in case the trade goes against you. And three, what is a reasonable profit target that I will be happy with when it's time to sell? And notice that word reasonable. You don't want to just shoot for the moon with no real basis or logic behind the target price. But if you can set a reasonable target price based on a percent gain, based on recent moves of the stock price from a similar support area, that is going to help you identify when it's a good idea to take profits. All right, so it really starts with Dr. Delito's risk management guidelines. When we set up our portfolio, Dr. Delito's guideline is never risk more than 1% of your total portfolio on any single trade. And the calculation is you take your total portfolio value times 1% equals the maximum loss per position. So if you have a $100,000 portfolio and your risk guideline is 1%, that means the most you can lose on any one trade is $1,000. If you have 10 trades as a maximum for dollar weighting in your portfolio, 10 positions, that means you could lose $1,000 on each trade and still have $90,000 remaining to reinvest and get back on track with your investments. How many shares can you buy and stay within Dr. Delito's 1% risk rule? That's the next method or calculation that we need to do. And we calculate the maximum dollars you can lose per position using Dr. Delito's 1% rule guideline. So that's from up there. And then you take that number and divide by the difference between your entry price and your exit price. And the cool thing is Jamin's spreadsheet, the trade analysis and risk management spreadsheet, does those calculations for you, and now you can factor in the maximum positions that you want to hold in your portfolio to dollar weight things as well. So let's go in and have a look and see how to set it up. Alright, so here is Jamin's spreadsheet, the trade analysis and risk management calculator. And when you open it up from the email, the attachment, you open up the attachment, you may see this protected view. Be careful, files can contain viruses, etc. If you want to use the spreadsheet, you'll want to click on Enable Editing so that you can go in and edit the orange cells. So we just left click on it a couple of times there, I guess, and it opens it up so that you can now go in and edit the orange cells. You can give the portfolio a name. For example, maybe this is your TFSA, aggressive, or it can be your RRSP, or just whatever account name you want to give to your portfolio. And again, you'll notice any variables in orange cells can be adjusted. So the portfolio size, if this is a more aggressive portfolio, or maybe we've got a specific amount in our TFSA to work with, you would just change that. So we just highlight the cell and type in the actual amount that we want to use, in this case $50,000. Here is Dr. Toledo's rule for 1% of our total portfolio size in terms of our maximum loss per position. And when we multiply 50,000 times 1%, we see that our maximum loss per position is $500. That's the most we can lose on any one trade. Now, we've got a little bit of an example here with New Flyer Industries in Canada, and you'll notice over here to the right, based on the entry price, the exit price, the target price, it tells us that we can purchase 124 shares and still be within the maximum loss rule of $500 per position. Because it's dollar weighted to 10 positions at $5,000 maximum per position, because the number of shares is 124, we can actually risk $5,000 on this trade and still come out less than $500 in terms of our overall maximum loss. If we were to change that to another number, for example, if we were looking at 8 positions, it'll change our risk-adjusted cost of trade. We can buy more shares and our max loss will be greater, but it'll still be below the $500 maximum loss that we're allowed under the 1% rule. We can change that again. Maybe we change that to two positions per this portfolio. Our maximum loss is still going to be the $500. In this case, the risk adjusted cost of the trade based on our 2 positions would be $10,000 is the most we could spend on the trade. That's 256 shares times the entry price of $40.20, and it maintains that maximum loss then at the $500. So that's kind of the most we can lose. So therefore we can't spend $25,000 on this trade, even though position weighting would say that we can. The most we can spend is $10,307 because we want to stay within that 1% rule of risking no more than $500. So a reasonable portfolio might be $10,000 per share, and we can set it up that way, 249 shares that we can purchase, and the max loss is $485. And here you can see the reward to risk ratio, 2.06 to 1, letting us know that we can go along and win just 50% of our trades and still come out okay. A 3 to 1 reward to risk ratio is kind of ideal, but even 1 to 1, if you have a 1 to 1 on a nice uptrending stock, you hit your target price perhaps a little bit earlier and get out of the trade, you might have more winning trades. So quite a bit will depend on your win-loss ratio. If you have a 1 to 1 reward to risk, but you're winning 80% of the time because you've set a fairly low target price and a fairly tight stop, that still might be a suitable reward to risk ratio for your style of trading. But for most analysts and traders, they recommend 2 to 1 or 3 to 1 is an ideal trading ratio. So once we've set up our trade, you'll notice it copies the information directly into the trade tracker down below. And so that allows us to come in and left click in the first cell, right click in the far right cell, and we right click again there and copy. Actually, it's a left click and a left click with the shift key held down. That allows you to copy that row of cells. Copy it, then we come back to the left cell into the trade history, and we right click there, and we want to make sure we select the values. So in this version of Excel, the values looks like this, 1, 2, 3 in the second icon here. That's the one we would click for values. Your version of Excel may have a little different approach, but it's going to be the values that we want to select in there. So once that's selected, it copies it in onto the appropriate information. The next day when your trade is executed, perhaps the entry price is going to be slightly different than what you'd hope to get it at, so you would just type in the actual price that you paid, and now you're ready to manage this trade. And when you do sell at your target price or your stop price, whichever one it is, you type that information here, the date and the actual sell price, and it'll automatically calculate the percent gain loss and also the dollar gain loss, and down below it'll just keep track of the total gain loss in dollars of the trades that you're managing on this worksheet. So it's a nice easy way to track. It's not meant to take the place of the portfolio manager in VectorVest or your account summary and your brokerage statement, but just to give you a quick running total and allow you to manage your positions quite easily from here. Typically you would save this file, give it a new name of file, save as, and give it a new name so that you've always got it going for you. If you want to print out your trades, then you would just want to come down and print out from this left cell down to this right cell over here. Those are the ones you would want to trade out or to print out. You don't need the upper part at all, so it should fit nicely into fit in window or whatever function you have for your particular printer. And then finally, the other change is Jamin has added 3 additional worksheets down below. You might have a trading account for your TFSA or your registered account or your mother-in-law's account. Well, you can track up to 4 worksheets right from this one spreadsheet, and if you need more, well, you can file and save as and create a new folder going forward. Alright, so that's the basic setup. I want to just go into a quick example and then we'll wrap up the video from there, but I hope that gives you an idea of how you can benefit from using this kind of a spreadsheet. Alright, so let's go in and look at an example. Just going to go to Canada for now, and you can go of course to the Viewers tab, Stock Viewer, and do some analysis on these stocks. You can go to your watch list viewer with all the different watch lists that we have available, some special watch lists, drips, monthly dividend payers. Wow Dividends is a great watch list. The indexes themselves or indices down here, financials, consumer staples, consumers discretionary, healthcare. Or you can do what I do. I track quite a few baskets of stocks, and the marijuana stocks visually I can see when I come to the total control of your emotions and you're in total control of the overall trade, and it's a really good feeling, and it does lead to more successful trading and more profits for sure. Alright, so hopefully that helps everyone. I think you're going to enjoy and really love using Jamin's new spreadsheet. I think it's got a lot of really cool features. There are quite a few people that made a lot of suggestions and submitted ideas for enhancements to the spreadsheet. At the end of the day, we wanted to keep it fairly simple, but we certainly did incorporate some of the wishes of a few of you that emailed us with your suggestions, and I think we've done that and still kept it fairly simple to use. So good luck with it, and good luck with your trading. Thanks for listening.